Cash is trash. Just crumple it up and throw it away. It's never a good idea to use cash if you have a credit card. If you are going to be using cash for any kind of purchase at all, or your debit card even, just use a credit card. There are so many benefits that outweigh using cash or a debit card. I don't know why anybody would use that in 2023. Just make sure you have enough money to pay off your credit card, so instead of using that cash, just put it on a credit card and pay it off at the end of every month. As long as you do that and pay your balance off in full, then you are going to be much better off than if you had just used cash. This is going to lower your credit utilization and increase your credit score and credit history. The higher your credit score and the higher your credit history, the more trustworthy you are in the eyes of anybody that's ever going to look at your credit score. And I have 5 reasons why it's actually better to use credit instead of using cash. Number 1 is security, and this is a massive one. If your credit card gets stolen, you're not liable for any of those charges whatsoever. Imagine you had a debit card, or if you had cash, which is the worst case scenario. If you lose your cash, guess what? You're never getting that back. Unless you have a really good Samaritan that's in a really good mood that day, forget it. You can kiss your cash goodbye. And if you use a debit card, imagine trying to get that back from a bank. If you have fraud on your debit card and somebody racks up thousands of dollars of charges on your debit card, that's your personal cash. Good luck getting that back. Yes, eventually you will, but the nightmares and headaches from that are going to be extraordinary. If you had used a credit card, however, and you had fraud on that, there's fraud protection. There's a lot of liability insurance on credit cards, and getting those funds back if you have fraud is so much easier. All you have to do is call up your credit card company and they'll basically refund any charge that you did not do. Also, using your credit card online is much safer as well, because you never know who you're shopping with online. Unless you're using a big company like Amazon or a big Fortune 500 company, if you're using some of these smaller sites, you never know if your information is going to get stolen. And again, you'd much rather have your credit card stolen than a debit card. Credit cards also offer you a lot of protection if you buy goods that are defective or maybe goods that never even showed up. So if you buy something online and it never gets to your doorstep and the merchant says, hey, we shipped it out, well, you can call your credit company up and you can dispute that charge. Or let's say you go to a restaurant and they overcharge you. If you paid with cash, try to get that money back. They're never going to give it to you because it's your word against theirs. But if you have a credit card that you put the bill on at a restaurant, guess what? Your credit card company will dispute that charge, and 9 out of 10 times, they're going to side with you and they're going to give you your money back. Also, if you like to travel a lot of credit card companies offer rental insurance on a car, travel insurance, trip cancellation. There are so many benefits to using a credit card if you're a traveler, because if you're trying to use a debit card or cash, again, you're not going to get any of these protections whatsoever at all. There are specific credit cards that actually offer enhanced security features like this when you're traveling too. Believe it or not, some credit cards also offer extended warranties on items like mattresses, TVs, appliances, you name it. There's probably a credit card out there that offers an extended warranty on it. And I'm sure you didn't even know about that. So if one of your items breaks down, you probably didn't even know you're protected for a certain amount of time. Obviously, depending on the credit card, you're protected for a certain amount of time under that extended warranty that credit card gives you. Okay, number 2, building credit. Using your credit card is so important to building a credit history and building your credit score. If you're not using a credit card, all you have to rely on is utilities that are in your name, other bills that are in your name, but using your credit card is the easiest way to build credit history and your credit score. Now, you may be thinking to yourself, who cares about credit? I don't care if my credit's high or if I have a good credit history or not. Well, you'd be wrong. Credit plays a massive role in today's society in determining many things. Like, you could have a much lower interest on renter's insurance, personal loans, most importantly, mortgages, auto loans. All of these things will have a much lower interest rate or APR if you have a higher credit score. And this is going to save you a tremendous amount of money over time. You don't think that a couple percentage points adds up, but over the next couple years or 10 years, or let's say you're doing a mortgage for 30 years, the lower the interest rate is, the more money you're going to save. And it adds up in a massive fashion. Imagine you have a 30-year fixed mortgage and you're talking about 6% compared to 3%. That's going to be double the amount of money and interest you're going to pay over 30 years. That can literally amount to hundreds of thousands of dollars extra just because you had a higher credit score. Same thing goes for auto loans as well. Let's say you want that brand new Mercedes and you're at the dealership and they're asking you what your credit score is. They run it and it comes back at 500. What do you think you're going to be getting quoted for these interest rates? They're going to be through the roof. They're going to be at like 7 to 10%. Compared to somebody, let's say, has like a 700 and above credit score, their interest rates are going to be way, way lower. lower, maybe in the 2 to 3% range, depending obviously on the time that you're going to be getting the loan. Also, the better your credit, the higher credit limit that you're going to get. So let's say, again, you wanted to go and get a car. Well, if you don't have a deep credit history or your credit score is really low, they're not going to approve you for the amounts that you want. Maybe you want to buy a $100,000 car, but you have a very, very shallow credit history, or let's say a 400 credit score. They're not going to actually approve you for that car that you want. You're going to have to come out of pocket for that car loan on your own, or you're going to be up into a massive high percentage rate, and that's going to kill you over the lifetime of the loan. Same thing for buying a house as well. If you think that a car loan is going to be expensive if you have a higher interest rate, just think about a house. That adds up really quickly. Also, you're going to get approved for loans and credit cards much easier the more you actually use your credit cards. So if you're just starting off, over the next few years, as you start paying off your credit cards on time every single month in full, they're going to start giving you more incentives to open up new credit cards that can actually lead to enhanced rewards. A lot of landlords solely rely on the credit scores for who they actually allow to rent their homes as a tenant. And especially in today's market where it's really competitive, the higher credit score you have, the better chance you are to actually get picked and chosen over other applicants. Also, for security deposits, a lot of utility companies like electric companies or cable providers, they're going to ask for a utility deposit if you have really bad credit. Even if you're renting an apartment, if you have higher credit, they're going to offer you lower terms on the security deposit as well. Instead of maybe having to pay 1 or 2 months rent as a security deposit, you might only have to pay $500 or less, or maybe they'll waive it altogether. And lastly, you might not even think this one would even matter, but if you're trying to get a job, a lot of employers now are starting to look at your credit score. This could potentially directly impact your opportunity to get a job. If you have higher credit than another person applying for the same job as you, guess who you think they're going to pick? They're probably going to pick the person with the higher credit. Number 3, this is going to be rewards and cash back. You actually get paid to use your credit card. I know that might sound crazy, but yes, at the end of every single month, you're going to get a rewards balance for how many points you actually spent on your credit card. Now, it can vary from credit card to credit card, so do your research and homework. I'll drop another video on which credit cards I recommend for which scenarios, but overall, you can get 1 to 5% on all cash spent on different categories that you use. Let's say you're using gas, and that month your credit card's offering 5% cash back on gas. So for every dollar spent, you get 5% back for whatever category that's going to be in. That's going to add up really quick. You might not think 1 to 5% sounds like a lot, but imagine on average you're getting 3% cash back on every dollar that you spend. Let's say you spend $100,000 in a year. You're going to get back $3,000 a year in cash. They're going to give you that back. And you could actually redeem this for other things like airline miles, which you can buy flights with. A lot of times they'll offer double or triple points on that as well. You can do it for clothing. You can do it for merchandise. You can do it for food and restaurants. I mean, the sky's the limit for cash back. A lot of times though, you could just directly transfer it in for cash and they'll give you either the cash back as a check, a credit on your credit card, or just deposit it directly into your savings or checking account. So if you had used your debit card or cash, that extra $3,000, assuming you spent $100,000, you would not get that back at the end of every single year. And you can cash this in any point, anytime. The choice is yours. That's why using a credit card has so many more benefits, because you're actually getting paid to use the credit card. And finally, you can earn massive welcoming bonuses for brand new credit cards. Now, I advise that you're really careful when you do this. You just don't want to go and open up a ton of different credit cards just to get the cash back. Some of them are really attractive. Like, for example, I had a Chase Sapphire Preferred card and they offered me $1,500 back if I had spent $6,000 within the first 3 months. Now, I did this in my first month and they actually wrote me a check for $1,500 just for opening up a brand new credit card and spending a certain amount of money. Now, you can do this for a multitude of credit cards. There's Amex cards that do this, MasterCards, Visa cards. Go out there and do your research. There's a lot of them that do this, but be careful. You don't want to go open up credit card after credit card just to get cash back, because eventually this will negatively impact your credit. Fourth biggest benefit is universal acceptance. Credit cards are a lot more convenient than carrying around cash, especially if you're traveling to a foreign country or for online purchases where you can't use cash. Visa, MasterCard, American Express, Discover Card, they're universally accepted basically across the entire globe, and you could use them whenever and wherever you want. Also, certain purchases are much harder to make with a debit card as opposed to a credit card. For instance, if you're going to try to rent a car, try doing that with a debit card. Now, yes, some rental car companies will allow you to do it, but most of the times they're going to want a credit card on file. if they use a debit card, they're going to have to deduct that money directly out of your debit account. And this could negatively impact you. Let's say you only have $1,000 in your debit account. They're going to take that money out as a hold while you're renting their car, as opposed to if you had a credit card, they're going to take that out as a hold as well, but it's not going to impact you whatsoever because it's your credit and it's not your direct bank account. And last but not least is number 5, and this is tracking your spending. So yes, you can track your spending with a debit card, but if you're using cash and your debit card, it's going to be much harder to track because you're not going to sit down and write every single transaction that you do when you're using cash. So obviously it's going to get a little bit confusing if you're using debit cards and cash as opposed to just using your credit card. Everything is going to be tracked, and you can sit down at the end of every single month and you can go through every single charge and every single item that you would spend money on that month. Tracking your money can give you a really good idea of where your money's going, how much you're spending every single month, and what you're spending your money on. Now, this is extremely important when you're trying to be financially responsible. Once you understand your spending habits, you can create a financial plan to budget out your money. This budget can be used as a guideline to make sure that you're saving for emergencies and not overspending. So every single month, you're not going to be negative and you're not going to be in debt because you're going over all your finances and everything is tracked on your credit card, every single statement. If you're tracking your money and you know where your money's going, you know where you're spending your money, this will greatly reduce your stress and your anxiety because you have a good grasp on where your money's going and what you're spending your money on. You're less likely to struggle with managing your money and encounter surprises if you're tracking it. So those are the 5 reasons why using a credit card is way better than using cash or even a debit card. It also requires a lot of discipline to make sure you're not getting yourself into debt. So make sure if you do use your credit card, which I highly encourage and recommend, use it responsibly. Pay your credit cards off at the end of every single month. There's a myth out there that says keeping a balance will increase your credit, but it does not. That's totally false. You want to pay your credit card off in full every single month. Usually average APRs on credit cards is 17%. That's a massive portion. If you're only doing the minimum payment, the rest of the money that you owe, you're going to get a 17% charge on top of that, and that adds up really quickly. Owning at least one credit card is the best way to build a healthy credit history and a healthy credit score, and that's going to help you greatly in life. Thank you guys so much for watching. I really hope you enjoyed this video. If you did, hit the like button, hit the subscribe button, drop a comment below. I'm going to be responding to everybody's comments. Stay tuned for the next video. I'm going to be dropping 3 videos per week, Sundays, Wednesdays, and Fridays. Until then, I'll catch everybody next time. All right, that's pretty good.